Pantheon AI presents Tesla Earnings Breakdown 2025 Q1. Alright, let's dive into the world of Tesla's Q1 2025 earnings. It sounds like it was a bit of a mixed bag, wouldn't you say?
Oh, absolutely. Complex is probably the right word. On one hand, there were definite challenges, but also some really critical strategic moves they're making for the future.
Yeah, let's start with the numbers, because that's where the immediate headlines were. The revenue came in at $19.3 billion, right?
That's right. And that was a 9% drop compared to the same quarter last year. Crucially, it was quite a bit below what analysts were expecting, which was closer to $21 billion.
Okay, so missing expectations, and revenue actually declining year over year. What was driving that shortfall?
Well, a big part of it seems to be challenges in vehicle deliveries and perhaps their pricing strategy. Automotive sales make up the bulk of their business. And that specific revenue segment, automotive revenue, was also down, missing forecasts significantly.
Right, that makes sense. Fewer cars delivered, maybe some price adjustments that hits the top line. How about profitability? Operating income and margins?
Not great news there either, honestly. Operating income really plummeted to just $399 million. Their operating margin dropped pretty significantly too, from 5.5% a year ago down to just 2.1%.
Wow, that's a big dip. What could be causing that? Increased costs? Maybe?
Could be a mix of things. Operational costs could be up. Or maybe strategic investments that haven't started paying off yet are weighing things down. Gross profit was $3.15 billion, but even the GAAP gross margin was only 16.3%. Those diminishing margins really point to a need for them to get more efficient with costs and their supply chain.
And then the bottom line, earnings per share, or EPS. I saw that missed estimates quite a bit too.
Yeah, that was another critical figure. EPS fell to 12 cents, which was way below the 29 cents that analysts were predicting. For investors, that's alarming because it could suggest that their investments aren't generating the expected returns, impacting shareholder value.
So on the surface, the financial picture in Q1 looked pretty tough. Revenue down, profits down, missing estimates across the board. But you mentioned strategic initiatives earlier. Are there bright spots?
Definitely. Despite those financial setbacks, they actually showed some resilience in cash management. Free cash flow for the quarter was $664 million. While maybe not massive if the revenue issues continue, it does provide some cushioning.
Okay, good to know they're managing cash. What about those strategic moves you hinted at?
This is where things get interesting. One of the big operational things they talked about was extensive changeovers on the Model Y production lines across all their factories.
So that might explain some of the delivery issues and lower revenue in the short term?
Exactly. These changeovers are strategic. They're aimed at boosting efficiency and integrating newer technology into the manufacturing process. The idea is it sets them up for better output later.
Okay, so a short-term hit for long-term gain on the production side. What else are they doing strategically?
A major focus is on introducing a new line of more affordable EVs. They're targeting the end of 2025 for that. This is huge because it should really widen their market reach and help them compete against both traditional automakers going electric and new EV players.
That makes sense. Getting into a lower price point is key for mass adoption. And the robotaxi? That's still on the table?
Yes, Elon Musk actually reassured investors about that. Robotaxi production is still slated to start in 2025 or 2026. That's a big piece of their long-term vision to transform transportation.
Revolutionizing urban mobility, potentially. What about some of the operational challenges they discussed, like battery supply or tariffs?
They address those. Management said battery supply isn't currently a limiting factor, thanks to their partnerships and gigafactory investments. And they indicated they're prepared to mitigate potential negative impacts from import tariffs, which is good proactive risk management.
Okay, so they feel they have a handle on those potential roadblocks. Anything else on the strategic front?
Yeah, their energy division is showing significant growth. Revenue was up 67% in that segment. That includes solar and battery storage like Powerwall and Megapack. It shows they're serious about diversifying beyond just cars and leveraging their tech in the energy sector too.
That's a strong growth area for sure. So if we look at market impact and investor sentiment, given the mixed results, how did the market react?
But what was kind of interesting, despite missing revenue estimates, the stock actually saw a short-lived rally, jumping 5% on the day the earnings came out. However, looking year to date, the stock is still down quite a bit, around 40%.
So that initial pop didn't erase the underlying skepticism, huh?
Exactly, there's persistent investor unease. A lot of it ties back to missing those delivery and revenue targets, but also, frankly, concerns around Elon Musk's political engagements and how that might affect the brand or focus.
That's a fair point. Any other investor concerns?
Definitely the possibility of new tariffs on components that could directly impact production costs and hit profit margins. Geopolitical factors, especially in markets like Europe and Asia, add another layer of volatility.
And how are they stacking up against the competition? I know BYD has been growing fast.
Yeah, competitors like BYD reported really strong growth during the same period. That competitive pressure makes the landscape tougher for Tesla and makes investors look more critically at their market position and growth prospects.
So, with all that, the challenges, the strategic pivots, what are investors watching for now?
They're really watching for execution on those strategic plans. Things like the Optimus humanoid robot project, which some analysts think could have commercial opportunities if it pans out. And how Tesla plans to revisit its 2025 guidance, focusing on those strategic objectives and market expansion.
Right, showing that they can navigate the current challenges while still pushing forward on innovation and growth.
Precisely. It's a balancing act. They've got to address the immediate financial and operational hurdles, while convincing the market that their long-term vision for sustainable transportation and energy is still on track.
So cautious optimism seems to be the overall sentiment, tempered by the realities of the market and execution risks.
That seems to sum it up. It's a pivotal moment for them, and how they execute on these strategic initiatives will really define their future trajectory.
Fascinating stuff. Definitely one to keep an eye on. Thanks for breaking that down.
Anytime. Pantheon AI, your information co-pilot.
Because learning shouldn't feel like a full-time job. Take care and see you next time.